I'm Ernie Ray, and this is the Beyond Belief podcast. If you've got a little money which you want to invest, what principles will you adopt in order to choose a product? You'll want to secure a return on your investment, but you may also want to make sure that you're investing ethically. Nothing that will damage the environment, no weapons of war perhaps. The world of business can be murky. Where can you turn to for help and guidance? How can you decide what is an ethical investment? I'm joined by Mark Goldsmith, who's Jewish, Umer Suleman, a Muslim, Martin Palmer, a Christian, and Devi Mohan, a Hindu. I began by asking Mark what he understands by the word invest.
What it means to me is you're putting money into something in the hope that it will grow. And that something is being run by people. They may be a little bit at arm's length, but it's still being run by people. So it's something where you have the same interactions with people as you do in any other part of your life.
Umer, what does it mean to you?
I guess philosophically I would say that it means to sacrifice something today for a hopeful payoff in the future. From a more practical term, it would mean investing today in a means and in a manner that's compliant with your own faith for payoffs later.
Martin?
For me, it means that we've been invested with skills, with resources, with knowledge, with wisdom, occasionally with foolishness as well. And our job is to make the very best use of that. I think it's about how do we use what we have now to potentially and hopefully make a much, much better world.
Devi?
I think investing means that you put your resources and money towards something that bring you benefits. It could be growth in your money, or it could bring you happiness through investing in something you strongly believe in. And it's no longer about just putting money and people managing it. It's all about technology.
Let's establish some principles, Martin. The early Christian community, what was their attitude towards money and how you use it?
Well, it was kind of not just money. It was all their possessions. In the Acts of the Apostles in the New Testament, we hear that the early Christian community in Jerusalem actually pooled all their resources, and somebody was actually thrown out of the early church because he didn't, or a couple did not put all their resources in. They held some back for private gain. So within the early church, it was very much a notion that we had these gifts, these wonderful things, and not just money, but clothes and property and so forth, and that we should share those, particularly for the poor. And that notion that the gifts we have are primarily for the service of the poor is something that runs right through the early church, through probably until about the 5th or 6th century, when the church becomes so wealthy, so incredibly powerful, that it has, in a sense, money to spare, and quite a lot of people going into the church because they quite liked the size of the money.
And there was another seismic change with the Reformation because John Calvin suddenly declared that interest was okay. And it has been identified as the moment when capitalism was born.
Absolutely. I think it is unequivocal. Up until that point, much honoured in the breach as well as in the observance, there was a ban within what was then the church, the Catholic Church. It was not the same in the Orthodox churches to the east, but in the Catholic Church there was a complete ban on usury, on the charging of interest. The Orthodox had a slightly different finesse to that. And it was being broken. But what Calvin did was he said, no, actually, it's okay. He did set a series of 7 restrictions, which particularly reinforced the notion that the poor should not suffer. But the trouble is, once you let something out of the cage, you can't necessarily tell it how it should behave. And very strongly the tradition or the academic research scholarship shows that it is with that ability to charge interest that you begin to get modern capitalism, particularly the creation of companies.
Mark?
I think we can't talk about interest, though, without a bit of history here, because, of course, members of Jewish communities were able to charge interest. And therefore they became very useful in societies for hundreds of years before the Calvinist change. And what was going on there was that Jews were forbidden to charge interest to each other. Basically, if you were connected to somebody, then you didn't make money out of lending them money, which would normally be something to do with their very basic needs. But if you don't have those links together, then using interest as a way to make taking a risk on what they were doing okay and have a value was all right. And that, of course, created a lot of the business abilities around all parts of Europe. If you look at St Albans Cathedral being built with money that came from Aaron of Lincoln back in the 1100s, that was a major, major building project based on the idea that it was okay to lend money, in this case, to the church.
Umar, the ban on usury, on interest, is what most people will identify with Islamic finance. But there are other guidelines as well.
Yeah, absolutely. So, I mean, it's very interesting hearing those comments from Mark on the role of interest within the Jewish faith and within Islam. I guess we're probably the main flag bearers in this time on talking about the injustice of interest, however it's applied, and how it actually negatively affects economies overall. Other than interest, you'll find that the Sharia talks about having an ethical screen. So the underlying industries in which you invest or transact in, and businesses, etc., they have to be permissible. So, for example, you couldn't invest in gambling industries or pornography or even alcohol, because the net effect on society would always be seen as something negative or seen as downright impermissible. Other than this, every transaction has to be asset backed. You're not simply making money from money. There's an underlying asset or service which creates real economy. Speculation and unnatural uncertainties removed from the equation as well. These are deemed impermissible. And what's very important is profit and loss sharing. There's some skin in the game for both parties, irrespective of your economic power. You're treated the same.
Devi, Hindu thought is a bit less specific on financial guidance.
So there are 4 career paths defined in the scriptures of ancient Hinduism. We have no one book to refer to, but there's a lot of word of mouth and scriptures like the Vedas we can refer to. And these 4 groups are based on the career path that you pick. For example, you would have a career path of worshipping God. And then your primary objective in life is to do everything that does your career very well in terms of worshipping God. And there is also a career path for fighting wars. So to a certain extent, that community is allowed to practice himsa, which is a form of violence or killing, which is usually prohibited by the Dharmic principles. The third career path is for merchants and businesses to be run effectively. And in order to run a business effectively, in the ancient days, there is a kind of capitalistic view of thinking interest rates are fine and your money has to grow quite fast. So it's quite different from the viewpoints that other religions take in that it is not banned or prohibited in Hinduism to charge interest.
I'd like to ask you about a fairly recent phenomenon. That was the Dharma Index. It meant that Hindus could invest with confidence. Just tell me a little bit about that.
The Dharma Index was created in 4 countries, in the UK, US, India and Japan, with a sizable population of Hindus and Buddhists. And the idea of the index was to invest only in stocks or companies that follow certain principles that were defined within the Dharmic principles. For an example would be ahimsa, which means non-violence. So if there are companies with troubled labor laws, for example, or inefficient corporate governance practices, or even things like animal testing, then that would not be a suitable company to invest under the Dharmic Index.
Martin?
It wasn't terribly successful, sadly. I was involved with the Oxford Centre for Hindu Studies in trying to create that one. It didn't take off, I think, because Dow Jones didn't actually quite get the point of why it would be a good thing not to do things. It kind of goes against their instinct. But what is interesting is that recently one of the indexes that we've been involved with in Faith Invest and that has attracted a lot of attention from many different faiths is the vegan index, which is a very strict one in many ways, picks up on a lot of what Debbie's mentioned in terms of Hindu attitudes, but this is a complete ban on anything that is not vegan in origin. And it's doing remarkably well. And I think it's doing remarkably well because it's very clear. One of the problems, I think, in the investing world is that there is an enormous amount of gobbledygook, greenwash, and frankly, conning going on. And part of the job, I think, of faithful people is actually to do proper due diligence, to actually dig back, to look at the chain of delivery, to see what are the points at which cheap labour is being used, in some cases slave labour, for products that are on sale in our high streets. So it is a very complex area. You're right, Ernie. There is a huge quest for value-driven investing now because of the disasters when people were not value-driven. But most of the so-called values that are now being explored have no roots. The faiths have roots going back 3,000 years, same with the Bible.
Mark, there is a Jewish concept called tikkun olam. What does that mean?
Tikkun olam is the sense that the world is not perfect. Therefore, we have to tikkun, repair, olam, the world. That's your lifetime task, is to make your contribution towards making the world a better place and finding ways in which to repair it. And one of those ways is by the way that you work. What you do at work, how you invest, how you participate in the economy. How do you make that economy make the world better? And that includes some of the avoidance that Devi was speaking about in the Dharma Index, but it also includes really positive work to make the world better. So a social enterprise, investing in a social enterprise, could be considered a part of Tikkun Olam, a part of making the world around an area better. You get some people into work who couldn't have done so otherwise.
But you know, I can imagine an investor listening to what you say, Mark, and saying, yes, great concept, repair the world, wonderful. But it's so complex. How can you be sure that what you're investing in is something that's going to repair the world?
A Tikkun Olam approach would then say, make sure that it is long-term. Very quick, short-term turnaround is not normally a way of Tikkun Olam. It needs to be something that's going to last. It includes looking at the environment. It includes looking at employment standards. It includes things like looking at microfinance, people's ability to get hold of money who otherwise can't. So is it something that's sensible investment-wise? Absolutely, it can be, but it's going to be in the longer term.
And I think it's also this question of actually discerning what it is that is going to change the situation. So if we take, for example, the issue around climate change, where there is a huge amount of activity, and the Church of England's index is enormously useful because it actually has put time and money into saying, well, where are the best resources? And we're working with groups like the World Bank's Climate Investment Fund, which has a huge program of due diligence. So at one level, there is no excuse for saying you can't find out what could work. And I suspect with Debbie's work on fintech, that's becoming even more accessible because we're no longer necessarily having to rely upon fund managers or bank managers to tell us what they think is good.
But Umar, there is a conflict here between a faith that has got ancient principles that were devised for an ancient world. The world has changed hugely. It's an enormously complex business world.
I think, look, principles are principles. You can't say, for example, that what was wrong yesterday or yesteryear is suddenly okay today. So how we understand universal principles of injustice are still applied today. The financial system, as it stands, without a shadow of a doubt, is fundamentally unjust. And you see this in terms of how profits are marked up and how concentrated they are.
Martin?
I think part of the problem is that we've hidden, to some extent, in negative screening. We've used that as a way of saying, well, whatever it is, it's not in the worst of all the industries, and the whole movement against fossil fuels at the moment would be a good example of that. Earlier it would have been issues like apartheid or civil rights in the States. What I think we have to ask now is, as people of faith, what are we for, and where can we put our money to be creating the sustainable industries and trades and work of the future, which otherwise might not happen because we just didn't think to put our money there.
Devi, you work in something called fintech, and you use a technology called blockchain. Now, these are concepts which our listeners will not be familiar with, but they are there to make investing easier, more transparent, more accessible. Just explain them to me.
So fintech is a new industry that came about as a result of the financial crisis of the 2008. It came about because consumers like us started not trusting banks enough. And blockchain is an element of fintech where you can actually store data forever. And this data is immutable, which means you can never change it. And it is completely transparent to all parties involved. So an example is storing land data or your marriage data or even the provenance of a diamond or a payment you would have made years ago on the blockchain so that you can always access it years later.
So what it means that by taking out the middleman, which very often means the banks or large corporations, you can always determine that your investment is recorded forever. Somebody can't take it away. They can't make it disappear. Fundamentally, it makes your investment sounder and safer. Martin, does that make it religiously more acceptable?
That's an interesting question. Yes, I think it does. We have a personal responsibility for what we have been given by God. And one of the problems for many of the religious investment groups is that they've outhoused their investment to fund managers. And the fund managers have basically gone on with it and occasionally, once a year reported back, which has led to a certain distance between how the money is used when it comes into, say, a religious charity and what it actually did to be made in the first place. When very often you find that there's some link between the problems they're trying to solve and the group that they've had the money raised through the investments causing the problem in the first place.
Well, let me remind you that you're listening to Beyond Belief, and today we're discussing ethical investment. And with me are Devi Mohan, Umer Suleman, Martin Palmer and Mark Goldsmith. In late 2019, the BBC told the story of the missing crypto queen. It was a hit podcast which went in search of the leader of a financial scam that invited people to invest in a fake cryptocurrency called OneCoin. Some of the many thousands of people who invested in OneCoin were religious. In this clip, Mufti Amjad Muhammad, a Bradford-based scholar, explains how some Muslims were conned into buying it because they were told it was halal or Sharia compliant.
Usually was the big card that the cryptocurrencies can play with regards to Islamic finance. Gaining more than you actually gave or vice versa. This is considered as a serious issue within Islamic finance based upon the fact that there's disparity and it's taking advantage of people in difficult circumstances. The only thing then would be, is it halal? If you have a few Muslims on there, I guess it helps. If you have a little certificate on there, I guess it helps. So when we see somebody saying it's halal, then that's great. It justifies one's conscience. So if I invite somebody in and they might make a loss, that might happen, but it's halal. I'm not doing anything wrong. It's not haram. I'm not doing anything wrong. So once you keep repeating that mantra to yourself, then that's what happens.
And guess what? OneCoin did have a certificate saying they were Sharia compliant that was issued from Pakistan.
What Sharia compliant is supposed to mean is that somebody has carried out thorough research, gone through all the conditions, gone through all the terms with a fine-tooth comb. There was no evidence of any research whatsoever. It was just a blank certificate saying this is okay.
Amjad issued a fatwa against this, a ruling that OneCoin was not halal. And then,
within weeks, the conditions which I had highlighted as being problematic changed. So clearly somebody was keeping a watching brief of what I was doing, because I only picked a couple in the initial fatwa. However, OneCoin does not actually exist. So I can easily make any form of conditions for something when the actual thing does not exist. It's a fraud. I would say engaging in OneCoin compensation plan is not Sharia compliant.
Mufti Amjad saw how fast OneCoin spread within the Muslim community.
I would say it is significantly high. Once it kind of gets into the community, then the community being slightly tight-knit, it's kind of like a bit like a wildfire in that it spreads very, very quickly over a very short period of time. This lady got in touch with me, and not only had she invested whatever little she had, she'd also invested money from her close family members, and I'm talking immediate family members. But the person who had introduced her to OneCoin was also an immediate family member. I wouldn't be surprised if family members have not even gone to the police, because having this kind of family bond, they think by me doing that, my cousin could go to jail or my brother could go to jail. And some people have mentioned to me that their relatives will just say to them that, well, you made a choice, I didn't force you. It stops being kind of clinical, intellectual thing, and it becomes an emotional thing. Don't you trust me? Don't you believe me?
The reporter on that podcast was Jamie Bartlett. Umar, do you recognise the appeal of that sort of scam to a Muslim investor?
When you say a Muslim investor, that means that there's some level of maturity and they understand investments. I cannot understand the appeal at all. I can understand the appeal to desperate people. I can understand the appeal to people who are following, I guess, just their desires. But for someone who has some level of sophistication or some level of religiosity, they wouldn't buy into that at all.
But the whole point is that a lot of people who want to invest the small or medium savings are not sophisticated. They don't understand the market.
Absolutely. So that's why you have to look at any sort of investment through the lens of, is it regulated? And you have to have some level of due diligence. Just because somebody comes and promises returns, that shouldn't be enough. And then if you have a slightly more sophistication, I guess from an Islamic screen, you can apply to it. Does it meet the fundamentals? Is it asset-backed or service-backed? What's driving its value fundamentally?
Mark?
Religious communities can be used to spread investment scams. And that's happened many times. Many will be aware of the Bernie Madoff scandal, for example. This was a person who promised to manage investments, but again, they were backed often by nothing, and they were backed in a pyramid scheme, effectively, similar to the one in the OneCoin. And it was a scam, but because people knew each other, just as we heard in the clip, do you trust me became the issue, and surely you do because we're part of the same community. That was one of the things that enabled Madoff to get away with what he got away with. So we, I think, in religious communities have a special responsibility to financially educate our members, because if we don't do that, they can be victims of these sorts of things.
I agree, and I think part of the things that we haven't done as faiths is educate. One of the most interesting examples of a faith doing that is the Church of Sweden, which is one of the largest religious investment groups with about $10 billion. And they set up 3 investable programs with 3 companies where they did all the due diligence. They then notified their 5,000 parishes that under this deal, any parish, any individual in the parish could invest into those 3 funds, which had been thoroughly explored due diligence by the church authorities, knowing that even if it was only, £1,000, it would be treated as seriously as if it was £1 million.
Martin, you did mention a huge sum of money, £10 billion of a
Yes.
church in Sweden.
Yeah.
Just very briefly, give us some idea of the amount of money that is sitting in the investments of religious bodies in the world.
It's quite hard to do more than a guesstimate, but a fairly educated guesstimate is that we're looking at around about $14 trillion worth of religious investments held centrally. We estimate that about just under 20% of the total investment world is owned by religious organisations.
Devi, how did you react to that clip from that podcast? Because you're clearly dealing with technologies that are designed to prevent that sort of scam from happening.
I think technology it has a problem that it is a tool. It is a tool or a platform to do further things on it. And what we do with technology depends on the person actually using it. So you can use it for good or you can use it for bad. And a lot of the stories we hear are positive stories about how technology helps the consumer. But equally, there are n number of stories about how technology can create problems and scams. So cryptocurrency is a fantastic example. Bitcoin has created unimaginable wealth in the world, which is a virtual currency built on the blockchain. And on the other side, we have people building scam-based currencies on the blockchain as well. So the problem with technology is that unlike the earlier scams we heard about, like the Bernie Madoff scandal, now technology and social media can take a scam to hundreds of thousands or millions of people. So the scale of a scam has increased. And I think as religious groups, I think there is a responsibility on communities and religious groups to kind of define very clear principles in investing, which we can then follow using technology and take it to their followers.
Well, talking of that, there are actual guidelines. They're called the Zug guidelines, Martin, and I know you've been involved in drawing them up. Just what are they?
Well, it's exactly what Debbie's asking for in a sense. We're working at the moment with around about 150 different religious investment groups, although we have access to about another 600 beyond that. And each of these, we've said to them, go back to what your faith teaches. What are the core teachings of your faith? What then are the core values that come from those teachings? Then look at your tradition of negative screening. And in many cases, as Umer has pointed out, it goes back to the very beginning of the faith, the ban on usury and other aspects. And then we said, so given what you're against, what is it based on your core teachings, your core values, that you are for? The guidelines are digging back into the past, finding our roots. But they're also saying, well, it's a lovely study, but how now do we do it?
I'd like to ask each one of you a final question. I want you to give one piece of advice to listeners who perhaps only have a small amount to invest and are wondering where to put it ethically. Umer.
What impact, what social returns are they creating through their wealth? Go for something which is low risk. Go with institutions that are regulated, and don't just chase the returns. Ensure that the money is being invested in a manner that you're happy with as well. If someone comes promising something amazing, then more often than not, it's not true. It's too good to be true, then it is.
Martin.
We have tended to treat the fund managers, the banks, as though they know. 2008 showed us catastrophically they haven't got a clue. So we have to ask the questions, we have to probe, and if that means taking a friend with you, take a friend.
Devi.
Markets fluctuate. Your principles ideally shouldn't. And that is the principle I would go with. What does it mean to you as a person? How do you show compassion?
Mark.
There's a universe of ethical investments out there, and most investment providers do provide that option. It's really worth looking at it, and it's not a difficult thing for an individual to do, even at very, very small scale.
Well, there we must leave it. My thanks to Devi Mohan, Martin Palmer, Umer Suleman and Mark Goldsmith.